Hello and welcome back to the channel. My name is Josh, and today I think the time has finally come. After 7 years of investing in real estate, I think it's time for me to sell out. Now today I want to talk specifically about my real estate investments. I think that real estate investing is an incredible way for any person, especially young people, to multiply their wealth faster than they could in other ways. And I think one of the main attractions of real estate is this idea of leverage. That's what allows you to really increase your wealth very quickly, where you might not be able to do that so fast with traditional investments like stocks or what have you. And what I'd like to do for you guys to really illustrate this point, if you don't understand what I mean by leverage, is let's just quickly do a calculation here. So I've got my calculator out, okay, and it's up on the screen there for you. Let's think about it this way. If you buy a $250,000 house, okay, $250,000, and you can earn a 5% rate of return on that investment in that property. I mean, maybe that 5% comes because the house appreciates, maybe it comes because your tenants are paying you more every month than the expenses, but either way, 5% return. So what do we get? That means we get $12,500 back. That equals a 5% return. Now, what if we earn that same amount, that $12,500, but like we do in most real estate deals, we only have to put down 20% of the value to buy the property? Well, if we divide $12,500 by 20% of $250,000, what that really means is we're gonna divide this by $50,000 investment we make because the bank puts up the other $200. So what we look at this point, this is crazy, right? Now we get a 25% return on our investment just because we levered our investment. Now, that's the interesting thing to think about with real estate investing, right? Is the main attraction is the quick and easy leverage and the fact that the bank will give you that without much of a question. If you were to try to get a leveraged loan to build a company or to buy stocks, that gets a little trickier. The bank isn't as excited to do that because the prices of those other assets aren't quite as stable as a piece of real estate. Now, who wouldn't want a 25% return? That sounds absolutely fantastic. But what we do know about real estate is that it's very hands-on, right? It requires a lot of work. It requires that you go and fix the damages and you take care of tenants and you collect the rent and you solve all these disputes. So we know it's a pain in the butt, but the thing is, you can't argue with the numbers. Every single time I look at my real estate numbers at the end of the year, I think to myself, okay, this is worth it. Although it could be a bit of a pain in the butt at sometimes, the numbers don't lie and it actually ends up being a pretty decent investment. Now, the problem is that for me, as you might have seen in my other past videos, over the past few months, my property has become more of a headache than usual. And some particular reasons is, there was this one night I was heading to a party with all my friends, and all of a sudden I get a call and there's water coming through the ceiling. So there's a massive leakage in the plumbing upstairs, and I've got to fix this duplex, and it's the middle of the night, and I am not happy about that. Now, in addition to that leak coming through the ceiling, now there's also a water bill to come along with it. And my water bill last month was $1,900. And that's not all. I get a call that all of a sudden the washer and the dryer in one of the units is no longer working and they've completely crapped out. And this is like the third time I've done cheap $300 repairs. So I'm just gonna need to buy a new one altogether. So all of this stuff starts to pile on, and all of this is happening in the midst of a really, really busy period at work. So I'm taking lots of clients right now. We're talking to them, we're on the phone, we're doing proposals, we're busy. Our company is really moving along, and now this real estate is this pain in my side. So I'm starting to think to myself, is this really worth it right now? But all I'm trying to say here, guys, is there are problems related to these real estate investments that are coming at me from all angles right now. Now, in addition to all those problems coming at me, okay, I can handle that, right? But here's something that I've been thinking about more and more lately, and I'm gonna put a visual up on the screen here. This is an image that shows back when I bought the property in 2014. That's crazy to think. I was 1 year out of high school, and for me at the time, it was such an exciting thing. And it's almost crazy to think that I've been investing in real estate for 7 years already. I've been accumulating equity by paying down the mortgage, and the tenants have been paying me, and over time, we made improvements to the property. And so it's really interesting. Not only that, the markets have been doing really well where I live, and the real estate has been going up, in value month over month. But here's something to think about, right? Is if we look at that real estate cash flow I get from that property as a percentage of my total cash flow on any given month, what we found is in 2014 when I bought this place, it made up about 12% of my monthly cash flow. That property would bring in $500 a month, and that actually changed my lifestyle. But now as my business has grown and other sources of income have grown, and hopefully, who knows, I can build an income stream with YouTube potentially, what we actually see now is it's less than 5% of my overall income. It's probably closer to 3 or 4. So what we're seeing is kind of this new era for me where that real estate property doesn't really move the needle anymore in terms of the monthly cash flow. It's not really changing my lifestyle like whatsoever. Now, in addition to me not really needing that cash flow for my lifestyle anymore, well, look at this price chart of the real estate index in the city that I live in. It's like prices are increasing month over month, year over year, and you probably want to sell out of an overinflated asset class too early rather than too late, right? So we have a lot of things coming together. The property is becoming a pain, and there's been a lot of expenses that might wipe out my profits for the year. I don't need the cash flow anymore, and prices just continue moving upwards in the community that I live in. So it all starts with me sending off a DM on Instagram to a friend of mine who is a specialist in the rental real estate market in the city that I live in. So we get to chatting, and I say, hey, why don't you come by the property? Let's take a look at this thing, see what we're able to list it for, what work we need to do, what we need to put into it, and ultimately what my return could be getting out of this thing. And what we concluded is that the property probably only needs $10,000 of work to, be showing worthy, to be ready to be sold in the market. And what we also found is I might be able to list this at a price that is $100,000 greater than what I owe on the property. So part of me starts to think, okay, this is interesting. In the best case scenario, we might walk away with a little more than that because we're seeing bidding wars in different properties. In the worst case scenario, we might sell for a little less than that. But I start to think about what I could do with my personal investment picture with an additional liquid $100,000 that I could start to invest, whether it's in this YouTube channel or whether it's in my company or whether it's into the stock market, whatever it might be. Now, this isn't any surprise to me, right? I've always known there was a lot of equity in this house, but there were two problems there. The first problem is I worked with a terrible lender. They were so bad. They're called First National, and I'm super disappointed with everything in the process. They have made it impossible to do business with them or to change the terms or to refinance the property. My accountant and I work very hard year in and year out to take as little money out of the business and claim as little on my personal tax as possible, which means they're looking at my tax returns and they're saying, you don't really make all that much. And I show them my corporate statements and they say, well, we're still not going to give you a refinance because we don't believe that your company's. It's this big deal. If you're a small business owner or an investor, you know how difficult it can be as a young person to get financing sometimes. So all of this being said, I'm starting to realize that that equity in that house isn't going to be accessed by me. I'm not going to be able to take it out unless I actually sell the property. Now, you might be thinking, Josh, you've talked all about how leverage is this wonderful thing for investment returns, especially if you have a high risk tolerance and you're willing to put in the work and you're kind of sophisticated and you're willing to take that risk. Leverage is a great thing. Now, if I sell the property, I won't have leverage anymore because that bank's 80% they're giving me is no longer there. And yes, that's totally true. I won't have as much leverage, but what I can do is in the event of a market crash or a serious correction, I have $100,000 of what I call margin. The broker I work with and most brokers have a 30% margin requirement, which means you really only need to put down 30% of the amount you want to invest in total. So if I were to walk away from this rental property transaction with $100,000 in investable cash, what that means is I actually have $333,000 of buying power. I divide that 100,000 by 0.3, the down payment amount I need. So I could still get leverage, not quite as great as real estate, but in the event of, we see markets at all-time highs, there's inflation on the horizon, interest rates are, expected to creep up. All of these things are signaling we might have a bit of a correction in the market. And if I do have access to that liquid cash and I do have the ability to leverage, that could put me in the perfect position to kind of buy that dip and see a significant gain in that wealth that I took out of the house. But even with leverage aside, it's hard for me to not ponder and think about what an extra $100,000 of liquid investable assets could do at my age and what that could mean in the future. And so I'm gonna show you a calculation with my phone again on the screen, and I wanna talk about what $100,000 could create in additional wealth down the line. So if you don't know how to use a financial calculator, by the way, guys, I highly recommend you get really well versed with these. It just makes your life so easy. So what I'm gonna say is we're gonna put away $100,000 as our new present value and see what this creates for us in the future. We're not assuming we're adding any more to that. I'm already adding to investments, but just for this $100,000, it'll be a one-time lump sum. Now, I'm trying to solve for the future value, and because I'm a very aggressive investor who sometimes even likes to use leverage, I might assume a rate of 9% in returns over time as I'm like 100% equities. And let's see what this creates for us at age 65, which is 40 years from now. Well, my future value in that case would be 3.1 million. So that's really cool to think about. This $100,000 transaction, if I put it into my investments, creates an additional 3.14 million over and above what I'm already planning to have at that point, which is fantastic. All I'm getting at here, guys, in summary, is it's really fun to kind of play Warren Buffett, to play capital allocator with your own balance sheet. For me, I have this property that's done really well, that there's lots of equity in, that is kind of slower growth than the other things on my plate. So why not sell it while I'm at this opportune time, get rid of all these headaches that are taking up the time that I have that I should be investing in other places, and invest all that new time and new money into places that are going to generate higher returns or are maybe undervalued. That's kind of the conversation, the internal dialogue that's going on in my head about my investments and the way that I think through these things. And for the most part, I think we could check off a lot of different boxes and add more free time and more free cash to higher growth sources if I just get rid of it. So we'll keep you updated on what's going on there, and ultimately, thank you so much for watching this video. If you liked it whatsoever, make sure to hit that like button below, hit subscribe, and turn on post notifications for more videos just like this one every single week. Until next time.